Welcome back. You're watching Stock Watch with me, Kumba, and joining me to unpack your stock-related questions tonight are Jean Pierre Verster from Protea Capital Management and Nader from Benguela Global Fund Managers. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Of course, we have to start with the biggest news of the day, which seems to be every day now. Anglo American. It's like the days of our lives. JP, since I haven't spoken to you in a while, let's start off with you. And new developments coming out. Of course, there's this big restructure, but also now the CEO of Anglo American coming out and saying that BHP basically forced his hand into announcing the strategic restructure sooner than they had planned. Firstly, let's talk about the timing of this restructure announcement.
Yes, so it's probably a bit sooner than Anglo American wanted to announce it, but they were forced to accelerate it because of what BHP Billiton are trying to do, and that is to take over Anglo American. There was also a big conference today in Miami where a lot of the mining company CEOs attended or are attending, because the US is a few hours behind us, including the CEOs of Anglo American and BHP Billiton. So today was the day for Anglo to announce something before they go on stage, and the two CEOs can each give a little bit more information. And effectively, Anglo American are saying they can restructure themselves, they can unbundle themselves, but they want to hold on to Kumba, which is the one difference between what BHP Billiton are proposing and what Anglo American themselves are proposing. So Anglo says they'll demerge or maybe list the beer separately, they'll demerge metallurgical coal, they'll unbundle Amplats, but they're going to hold on to Kumba. So it's going to be interesting to see. I think it's a very good defensive move from Anglo. There's now a higher chance of Anglo actually not getting captured by BHP Billiton, but actually staying an independent business because of the announcement today. But the soapy will continue, Zenati.
Yeah. I hope the two CEOs didn't bump into each other in the bathroom. I would have liked to be a fly on the wall if they did. Grant, yeah, of course, very interesting here. BHP said they didn't want the main South African assets, and Anglo American says, you know what, it's kind of giving Telkom when they were rejecting every offer and they were saying, you know what, we'll do this ourselves. Do you think that the Kumba, Anglo American retaining Kumba makes things more difficult for BHP? And do you think there's still a chance that they could still come in with an offer and then just accept Kumba in the stable?
Oh, well, ultimately, they could definitely come back with another bid, because it's down to shareholders. If they can put something in front of shareholders that's far more attractive than Anglo's can, yes. You know, whether that's the most likely outcome from here, it's not that clear. I mean, Kumba is a cash cow, and that's why Anglo's wants to hold on to it. It really does provide a fantastic, stable cash flow to the rest of the business. But these plans of Anglo's, they've been under pressure for quite a while now. It's not new. They've been under pressure to restructure, unbundle, create value, rationalize and streamline the portfolios. So, as JP said, the Billiton has forced their hand somewhat, but there were a number of things. For example, it was well speculated that De Beers was already on the market a number of months back before BHP came to the table. So I think anything's on the table. I mean, I don't think a Rio. I know someone like a Rio would be looking at it. Glencore would be an opportunist as always. It's still in play. It's just that Anglo's is trying to at least take control of their own destiny, which I appreciate, and I like that about what's happening as well.
All right. Well, of course, we did see the divergence in the share price reactions. Kumba was up on the day. Amplats still being hammered again. There's a question here on Amplats. Is Amplats a buy at current levels, taking into consideration Anglo's demerging plans? JP?
I wouldn't think so. So the price was down relatively sharply today because, as people see, there's now a big chance that Amplats will be unbundled, whether it's the BHP proposal or the Anglo proposal. It means there's going to be a flood of Amplats shares on the market. And for those people who only want to take exposure to the rump of Anglo American, they would have bought Anglo American and shorted Amplats and put that trade on today, which put further pressure on Amplats. So if you look at the PGM price, it's come down sharply over the last 2-3 years after probably being in a bubble, I would say, because of specifically the rhodium price and what that has done. And it's a tricky one to know or to foresee what can boost the PGM price again going forward. The EV adoption has been slower, but it's still happening, especially in China, and their price of EVs is so competitive in the rest of the world. One would expect that with less use of internal combustion engines, which use the PGM metals for the catalytic converters, the outlook for PGMs don't look great. So no, I would not be a buyer of Amplats until I see a little bit of light at the end of the tunnel for the PGM market, which is still in the doldrums.
Yeah. Well, JP seeming to think there's not much. The outlook for PGMs actually doesn't look so great. There are other people who say it does. Grant, would you be basing your decision on Amplats on, what you think the fundamentals are, what they could do, or purely on how investors are reacting and could react with the unbundling of Amplats from Anglo American?
There's a lot of noise in this price now, and remember, you've got, as JP said, you've got guys arbitraging this transaction. You're also going to have just hedge funds shorting. You're going to have foreigners who don't want to hold a standalone South African asset. There's going to be a lot of selling pressure, a big pool of sellers in the market for quite a period of time, and it's unclear how long and how much and who's going to absorb that. So if you want to play PGMs, you should probably look at one of the other PGM stocks, is what I would suggest. It makes it much cleaner, much safer, and you're at least taking your view on the underlying on the PGMs rather than on all the sort of corporate actions that will unfold. So I don't think it's a screaming value; it's a screaming buy relative to the others. And as to whether the whole sector is a buy, well, that's a very complicated question. And potentially, it is looking better. It's potentially bottoming out. But longer term, it's a tough space to get excited about.
Well, another space that investors don't seem to be excited about is healthcare. There's a question or questions on Discovery, and actually when I saw the announcement that the NHI is going to be signed into law, my first reaction was not going to the share prices, but they've been hammered. Discovery, for one. There's a question here, why Discovery has fallen significantly today. Is it purely NHI? There's also another question. Discovery launches some home loans with some attractive offerings and got punished 8%. I don't understand the share. JP, is it all NHI?
I would say the vast majority of the share price move today is because of the NHI announcement, that act that apparently is going to be signed in 2 days' time. Look, the moment it's signed in, just about every medical aid and medical aid administrator will be launching a court case to say it's unconstitutional to tell doctors that they cannot charge what they feel they should charge, and to tell citizens that they cannot just pay for a service that they want. They are forced to accept a service that only the government will offer to them. That does not seem like freedom of association and being able to have a choice in the matter as we should have in this country given our constitution. So that fight is going to be 2 to 3 years. But still, it's a dampener. It's a negative cloud hanging over the whole medical aid and medical aid administrator sector. That's a very profitable group, a part of Discovery's business, administrating the Discovery Medical Aid and a few others. So it's negative for them. But I think it's going to be a long time before we really have an impact. And I think the chances actually of it passing constitutional muster is also less than 50% probability. So it might be an opportunity to pick up some Discovery shares, but the noise in the short term up to the election might get a bit worse, so you might even get a better price than today's price.
Well, interesting that you say that it might be an opportunity to pick up those shares, because yesterday I actually had a conversation with 91, with a person from the 91 Value Fund, and they actually listed Life Healthcare, Netcare as one of the stocks that really are looking very valuable and cheap at the moment, that investors should be picking up, and even ahead of elections and not wait for the election outcome. Grant, what would you say in terms of, do you think that this is a buying opportunity, or do you just run?
I must say, I find this space pretty unattractive even before this news that it was potentially going to be passed. So it might be value, but to me, it's one of those sectors that's mostly a value trap. There's so many headwinds, from pricing to patient growth to revenue growth to cost pressures, skills shortages, you name it. that I just find it a very difficult space, especially Netcare and Life Healthcare, the hospital space. It's not one I would go to, even with the sell-off on this news and even with them trading as low as they are. I think it's going to remain value for a long period of time.
All right. Well, a very interesting question here, JP. One of the questions that have been waiting for you to come onto screen. Now that you are no longer a Capitec board member, can you comment on the results and if you hold Capitec in your funds?
So, Zanati, I will be retiring as a Capitec director on the 31st of May. So I have another 2 weeks
so
to
it's
go
too soon.
before I retire. Yeah, so it's around the corner, but not quite yet. And I'll probably give myself, let's say, 6 months cool off period before I start commenting on Capitec. So the viewers can start asking my opinion about Capitec, I would say from next year. January 2025, you can ask me. And until then, I'll also not hold any Capitec shares in the funds under management, just to make sure that there's a clean break and some time after I was a director, so no one can point any fingers if I start getting active in the share.
Starting on a clean slate. Just one last one for you, JP. Are you invested in any Canadian stocks? There seem to be some quality companies not often mentioned by commentators. Canada.
Yes, so our 2 main holdings in Canada are Constellation Software, which is a big software group. They also bought, you might remember, Adapt IT a few years ago in South Africa. And they bought a lot of IT companies all around the world. They're very active, very good management team, very good capital allocation. We also own Alimentation Couche-Tard, and I can't pronounce the French as well as the French Canadians can, but it's one of the biggest fuel station operators in the world. So those are the 2 main ones. And in the past, we've also owned Shopify, but it got a little bit too expensive for us. So those are 3 Canadian stocks one could look at.
Oh, I actually didn't know Shopify was Canadian. Grant, are there any regions that you're quite keen on that look interesting at this point?
Regions, you're talking about globally?
Yes.
Yes. Well, a couple of sort of not mainstream ones would be Mexico. We're quite constructive on Mexico. They're very well positioned to benefit from the deglobalization and the nearshoring and onshoring that you're seeing taking place. A lot of Chinese companies as well and US companies are moving a large amount of manufacturing and distribution into Mexico and through Mexico into the US. So that's one area we like. Poland, I think, is very interesting, but I think it depends on how the Russia-Ukraine. So it's an area we watch with interest, and we see some good businesses there, but we are more cautious on actually investing there at this point in time. So probably the most interesting one right now is Mexico. We have a couple of holdings there.
All right. Very, very interesting. There is a question here. I don't know if it's any one of you. Show me the fella who said MTN was his stock pick. In fact, I can show our viewers a lot of fellas. Q1 down 18.8%. Share price punished. Outlook is to remain challenging. And I must say, I was actually quite surprised to see the downward pressure that we saw today, because of course this has been a trend, but I thought that most of it was priced in, but we did see that share price plummeting about 9% today. Grant, what do you have to say about MTN?
Look, so it's one we don't hold anymore because we have been quite bearish on it, and it's looked like value for quite a long period of time. But it's a classic example. There's a lot happening that's out of their control, especially in Nigeria around the currency devaluation. And some of those other challenges around pricing. They don't get price increases through the government's not giving them the ability to pass on the inflationary cost pressures. So there's just a lot of challenges, in addition to which the whole industry is challenged. It's fiercely competitive, pricing's under pressure. There's any number of things that would make you say you need to be careful of the industry, and within that, they've got a number of individual challenges specific to them. I remain cautious. Of course, there's a price for everything. The business there's still cash generation there. Of course, they can't always get some of their cash, but that's a separate conversation. So I think there's a price for everything. And perhaps I'm also surprised by this reaction. It's not new that they're facing challenges. Nothing today was unexpected to me, but it's a worse reaction than I expected. So again, this is the one I'd prefer to sit on the sidelines and look for the better quality businesses. In this tough economy and in this tough region, you want companies that can grow earnings in and of their own actions.
Yeah.
This is MTN is being blown around by factors beyond their control. It's not a great business to be in at the moment.
Yeah, it's really just quite interesting, just looking at the MTN story and the company deciding to focus on Africa. But yeah, even here, there's still a lot of headwinds. JP, would you share the same sentiment or opposite?
No, very similar to Grant. We also sold our NTM holding a while ago. I can kick myself. I didn't go short. I should have gone short, but I didn't. And I mean, today it was really ugly to see not the constant currency numbers, which look roughly flat or just slightly down, but the actual numbers, taking into account the Naira devaluation. Those were ugly. So again, to Grant's point, in the African region, when you have countries and economies that are very linked to commodities like oil, and you have the impact of a lower oil price and a change in government and new policies on the local economies, and you have vast devaluation of currencies, it's tough. We even saw with Vodacom in the last year, devaluation in the Egyptian pound. And that has also impacted them. What was it, yesterday, they also reported. So it shows you very similar dynamics in the whole telco sector across Africa. Tough at the moment.
Yeah. The environment is tough. There's a question here. Any advice heading into 29 May? Are there pockets of opportunity that we can get into now for stocks? And if so, where? Or is it a wait and see? As I mentioned, the conversation that I had with the 91 rep was that don't wait until after the elections. Grant, would you say the same, where you need to position yourself maybe for different scenarios before the 29th of May, or is it a wait and see?
Yeah, I think you've got to be careful about letting the elections define your, your investment process. But there are some, if you're bullish on the elections, or you at least not negative, I think some of these SA stocks are very cheap, and the relief around a sort of neutral to positive election, you could see some further value unlock. There's been a buying around for the past few weeks, month or two, I would suggest, in the SA Inc. space. The banks look incredibly cheap, the retailers, some of the other financials, they would give you some nice exposure. But again, it doesn't make sense to put significant directional positioning into what's somewhat binary event. Unless you're a trader, those kind of big positions, they like, if you're right, you're lucky, and if you're wrong, you're unlucky. It's not a great strategy, to be honest. So I wouldn't advise that being your sole purpose of the investment.
Yeah, because I was actually about to say, unless you're looking for like short-term benefits. JP, would you wait and see, or would you just position yourself ahead of the elections? Yeah, how would you play it?
So what we've done is we've increased the diversification in our funds and decreased a lot of our exposure. So we've taken risk off, if I put it in those terms, because of this uncertainty. And to Grant's point, you have different outcomes. Some of them could be quite positive, but a lot of them could be very negative for South African focused companies. But markets themselves are effectively discounting mechanisms. It's a place where people go, and you can effectively see it as a place where you can see what the probability is of different scenarios that might play out in future. And already in the last month, you can see the rand has strengthened, the South African banks and retailers have bounced, and that implies people are saying, okay, maybe there's a greater probability of the ANC potentially winning and not needing to do a coalition with the MK party or the EFF, maybe a few smaller parties, or we'll have much of the same in the next 4 years that we have had the last 4 years, but hopefully with less load shedding and some problems being sorted out, and the very radical elements not really getting a seat at the table. And the share prices and the rand moved. So I would say whether you invest or not before the election depends on how the markets move. So at the moment, it's positioned for a positive outcome. So you might want to potentially just a little bit lighten your SA exposure for if you think the probability has maybe gone too far, with people thinking a positive outcome is too highly discounted in share prices. But I wouldn't make any extreme moves to a portfolio or extreme changes. Rather go for diversification, and don't take one-way bets where if you're right, you make a lot of money, but if you're wrong, you lose a lot of money, because as Grant said, that's gambling. That's not investing. You shouldn't do that with with hard-earned money.
All right. Well, let's get into We Buy Cars. Why did We Buy Cars make a loss? Grant, is it not because I know there was a difference between the headline earnings and the core headline earnings, and is it not because of the whole unbundling from transaction capital?
Yeah, exactly. There was a lot of fees attached to the listing and unbundling. That was one of them. And the other one was they had this option that they essentially had to buy their way out of in terms of the default option in relation to SA Taxi and transaction capital. So if you strip those out, because they're not repeat, they won't repeat, they are one-offs. Next year they shouldn't be there. The actual underlying earnings, excluding those, did really well. I think it was up 27 odd percent. I thought it was a good update. It's not a company we own, but it certainly looked like they're doing a lot of the right things in the right places. It is a scale game. It's a game of network effect and critical mass, and they seem to be at the front of the pack. So a good result from what I could see.
All right, JP, I have another one for you. What's your view on City Lodge? FNB mooted this, a mid-cap pick in a report last week, heavily exposed to business and domestic travel. Your take on City Lodge?
I like it, but I wouldn't say it's one of my top ideas. I think, yes, when it comes to, call it individual travel, leisure travel, that has rebounded, and especially in Cape Town is doing very well. But a company like Sun has got more exposure to the Cape Town market than City Lodge, for instance. So I would prefer that hotel group to City Lodge because of the geographical split. Also, they still have got the dilution they're working through because of the rights issue they had just after COVID. And you've seen Sogo Sun Gaming buy a stake in City Lodge, which is a bit strange because I don't foresee them putting in some electronic bingo machines in City Lodge forecourts or
never know.
Areas. You never know. That would be nice. So I like City Lodge, but I wouldn't say it's one of my top ideas.
All right. Well, gents, let us get to your stock picks for today. Grant, what are you picking?
So I'm going with Afrimat. Last year's numbers, about 70% of their earnings derived from the iron ore operations. And I think what you find here is that as commodities are bottoming and recovering, Afrimat's being overlooked as a good access point into the sort of broader commodity play. Yes, they've got a lot of iron ore exposure, but they also have phosphates and a number of other things. And so they'll benefit as mining activity picks up, as commodities pick up, which I think we're seeing the start of as the numbers out of China are starting to improve sequentially in the last few months. And so you add to that, plus, if you look at Raubex, you are seeing a pickup in the infrastructure and construction activity, something that they'll also potentially benefit from, plus the optionality in Lafarge, the cement business that they bought. So I think I like it. I think there's an opportunity there, and that's my pick of the day.
All right. On your side, JP?
I'm picking Prosus. So the one result we didn't speak about today, which came out today, is Tencent. A strong quarterly result from Tencent. Obviously, that's good for Naspers and Prosus. And if you look at the last year, Naspers has outperformed Prosus. Mostly the first 6 months of the last year, not the last 6 months. The performance has been very similar. But there's a few things I like about Prosus slightly more. The one is this gap between the Prosus and the Naspers movement in the share prices. There's going to be potentially a scrapping of the tax in the Netherlands for the buying back of shares of companies in the Netherlands. That'd be good for Prosus. And then there was another announcement today of Delivery Hero selling their Taiwan food delivery business to Uber Eats. And that really fixes the Delivery Hero balance sheet. And Delivery Hero's stock price was up over 20% on the day. And Prosus has got a significant stake, roughly a third of Delivery Hero, plus a bunch of other food delivery businesses and some other e-commerce businesses. Plus you have the share buyback continuing, accreting some value on a per share basis. And it's trading at a significant discount to the sum of the parts. So what's not to like? So Prosus and Naspers are still two of our biggest positions, still like it. And with the Chinese e-commerce sector seeing a bit of a turnaround in terms of sentiment and a growth still in underlying earnings of the likes of Tencent, I think process after treading water for a while looks decent at the current price.
All right. Gents, I think we have about 30 seconds. There's a quick question. Any one of you can take it. Does the panel like any listed alternative managers like Apollo or KKR or Brookfield? Anyone want to take it?
I'll say quickly, Apollo and KKR look okay to me. I'm not a fan of Brookfield. They've got a few different companies listed also in Canada. We spoke about Canada earlier. But they've got a colorful history, and sometimes there's a lot of financial engineering that goes on. So of those three, I'd rather go for Apollo and KKR.
All right.
Yeah, I like KKR as well.
All right. Thanks, gents. Really appreciate it.
Thank you.
That is all for tonight's Stock Watch. Thanks to our guest, Jean Pierre Verster from Protea Capital Management and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay tuned.